right, how we doing? Sam here with you. It's Monday, December 31st, last day of the year. And we're going to take a look at, we'll do a quick update here on Bitcoin since we've had a little bit of movement since the last video I did. So before we get to that, just a reminder here, we have this New Year special running for another couple of days here. So if you've been thinking about joining us in the members Discord, the belt system, or all of the training that we offer to you, this is a way to do it and save yourself some dough. So it's 20% off on the 3-month package, 30% on the 6, and then 40% off on the 12-month. That seems to be the most popular. So if you're interested in that, you can find us on Twitter. There'll be a link underneath this video. Reach out to us. We're happy to accommodate you. So with all of that said, let's get over to Bitcoin and take a look at things. All right. So here, this is exactly as it was on the video I did. Excuse me. On what was it? Saturday. Oh, Saturday. So we broke this countdown pretty. In a lot of detail here to come up with this count here, so I won't take you through that again. But just a quick reminder here: we're operating on the assumption here that we've got an expanded flat. So we have an A wave, an expanded B wave, and then we go into the C wave. So that correction looks like looks like that, right? So so we get an ABC into the A, ABC into the B, and then 5 for the C. So we get a 3, 3, 5, the expansion being here in the B. So I think that's a reasonable count here. Now, as is often the case with Bitcoin, it's very elusive here. It's very hard for us to be definitive about exactly where we are. So this would be my primary count here. So we've got kind of mixed messages. You can see we get this clear impulse here now because of this mess here and what I took you through on in the breakdown of this count on Saturday's video. This would be my primary. So I still think we go A, B, and we have one more push down for a C, right, to complete the B wave here. So the assumption being this impulse here gives us the A. B, right? So we've gone A, B still yet to go in, right? So of the larger degree, it's looking like this. So we'd have A, B, and then up for the C. That's the larger correction that the count would imply is underway right now. So if we're putting in the B wave now, well, we know, right, it's like any B wave or a 2 wave, anywhere from the 50 to the the 786. So we've got a fat target down here. But now, if the count is correct, right? So we saw this reaction here. So just to quickly kind of review here. So we've got an impulse retrace, and we hold an internal retracement. We hold the 618. It's not to the tick, but we're pretty close. So a little front run, hard to say. Now, so we've got that established. With that, it's got an algo target up here. All right. So this, and I showed this last week. So we have this pitchfork in play. All right, so here's the corner pocket, and when a sharp viewer caught me last on Saturday's video here, I think I pulled the second here, so it looked like it was golden. It was when I was changing back and forth on the count. So to get it exactly right here, we'd go to this low on the assumption the A wave is complete. So we don't get a golden corner pocket, but a corner pocket nonetheless. Right, pretty close. So this 80% is still in play, right? Nothing changes there. Right? So we still have a corner pocket. We still have 80% probability of making the median line as long as that pivot holds. Now, and I've shown this before. So let me get this off of here. So if that pivot breaks and we go down here, just so you understand these. All right, so if that were to happen, well, you're stopped out here. You're out. So if you were long off of this, so that trade was, whether it's a scratch or a loser, either way, that it didn't turn out the way you'd hoped. So if we were to come down here, just for the sake of the example, come down to the 786, that 80% is still in effect here. It's eventually we get a pivot that we can hold, and then the 80% applies. So just because we hold here, if it were to break, right, that doesn't mean that we couldn't go here or even here, right? So so maybe we get a golden, right? We go here. That 80% still in play, but of course, keep in mind there's going to be a competing algo and pitchfork going the other direction. So if you look at it here, so if I pull from this swing right to that low here. So what, right to the 618. So these are almost the distance. So this is a slight front run here, slight front run here. So what we have is just a big fib fight, right? Algo is battling it out, right? We're just caught between two 618s. And now just going sideways, sitting at the point of control, at least off visible range of what you can see here. Right? That wouldn't change much here. So if we just look at the swing and the retracement, here's point of control. We're sitting right there. So just a big fib fight here. Who's gonna win that? Now it looks to me like this is where we're headed, but shit, I'm wrong all the time. So this this is still in play. All right, we're just moving sideways now. Right. So this is what I want to show you here. So you got this 80% still at play as well. So this not quite a golden, but still a corner pocket. Right. So just because we've got this. You can't forget about the fact that there's an 80% sitting here waiting to get here. Right, this one, let's shrink that down a little bit. Waiting to get here. So this guy, so we got a fib fight. So that's trying to get there. So that's January 19th. This trying to get there. Well, same day, right? Just earlier in the day. So this potentially, right? Okay, so one of these is going to fail. Right, both, that's 80% here, 80% here. But it's 80% until a pivot breaks. So one of these 80% is not going to be realized. Now, keep in mind that we had, I went through this on the video on Saturday, the fact that we get a corner pocket here, we move away from it, we head towards the median line, not making the median line. And in fact, I referenced this on Saturday, that the first thing we had to get through was get through the golden zone, right? Because there's going to be an algo sitting there waiting to sell it. Just like there's an algo sitting here waiting to buy it. So so there's just, how do you know, right? Which way are you going to go? There is no way to know. Well, there's no way to know, of course. But what we can do is we can use the Elliott count, right, in our Elliott rule set here to guide us through where the most probable outcome is. Now, that, again, it doesn't mean just because it's the probable outcome doesn't mean that it must happen. I mean, again, this thing, we could do that. Oh, tonight. We could do that in an hour. You never know. But we're stuck here. So we're sitting between these 80% either way. So the only thing you can do, here's where Elliott count is useful to you. So you've got a count here that's forcing somewhat of an unconventional correction. So you can make your best educated guess, and it is really that, an educated guess, right? Based on probabilities, experience, understanding these probability zones, the odds would favor the move down. Right? But it's just that, right? So long shots happen all the time. So that would be more the long shot, this the more probable if you wanted to play it safe. But my advice is there's no reason to take a trade here. If you're not long and you're looking for a trade, long or short, if you're not in the market, there's no reason to pursue a trade here. You just don't have enough information. Right? Unless you're just convinced that this is our pivot and we have to go down here, I mean, certainly you can trade it, but if you were looking to evaluate the conditions for a new trade, there's just not enough here to really work off of, right? Other than the Elliott count, right? So as we sit here in this fib fight, so what do you do? You wait. Right? You have to wait. So this one of these 65s is going to break. Right? One of these sets of median lines likely to realize its potential, its 80% potential. Then we'll know, right? So now keep in mind that the coming down here, the alternate count, the idea that this could be, this is a 1 and we'll go down for a 2 and then 3, 4, and 5 are all still yet to come. That's still in play. Right? The big problem we have with it is it ties back to the difficulty we had finishing down here, right? Because we get a zigzag, right? As we have been through that in a couple of videos. We've got a 3-wave structure. We can't finish that way. Now we came up with a kind of a wacky way that it might work, but do you want to lean into what might work, right? Some sort of ugly count to accommodate the rule set? Not me. I'd rather be clear before I put any money on the line, and I just don't think you can get clarity here. Now, there's a few things that are interesting here. So you look at it and you say, gosh, shit, who knows? Well, despite the fact here that we're moving we've got mixed signals, it is technical. So don't forget about the wolf range here. So that's when I'm not sure, that's where I'll go. So I'm going to pull this all off here and just open this up a little bit. Because it was funny because we did this was very similar before the breakdown and then this rally up. So if I go here, I'm just working off the wolf range here. So I'm trying to range the market. So I'm going to change the template to the wolf range. So the first thing I see when I range that, so here's the first move, here's the retracement, here's 100% to the tick. So what I do is I pull that down to the 1. Now look. So here's my new range, right? So because this was technical, this was the 100%. Now I get a new range. Now I come down here, I actually get through, right? We get through the 100% of this range, right? So the green is the doubling. Here's 150, here's 250. Now note here what we come back to. So if you took this even further, if you went down to the 3 and said, okay, where's the next? You know, it's not to the tick, but it's pretty close, right? For the 3. Now I've got a new range. Look what we do. Right to the 50. So if you were thinking about this as the A wave here, and here's the B, sorry, so here's the expanded flat, so here's the A, the B, and the C. So you might look at that and go, well, why do we stop there, right? That's always the question. Why do we stop there? Well, you've got potentially, right, that 50 of that. If that's the A and we've gone A, B, C, all we've done is just do the 50. Right, so here we had to allow for a double bottom here for the 3 that gave us that 5 into the A wave here. Right, so double bottom here, then we get the 3, 3, 5. Here's to the 50. Now we start combining. Right, so now I'll have to change this here. So if I pull this here, that's going to just duplicate. Get that on there. Now let me put the measured move on. Right, so here's the 50. Now, so we see these targets down here. So here's the algo target. Here's an interesting little confluence zone down here where we'd have, let me show it to you with all of it on there. So working off of this low, looking for confluence zones. We're always looking to stack, right? What else is there? Well, look what we get here. This is literally on top of it. All right, so here's the 786, and I have to move it to. And then you've got the negative 618, the secondary algo target, are literally on top of each other. Now you've got the first algo target, this one, right, from this 50, sitting right on top of that. Right? So even though you can't, shit, what is going on with this count? It sure is technical. Right? These pivots, you got to know how to find them. You got to know what to look for. Right, but if you can start to combine those things, right, so you look at that and you go, huh, right? But you can't forget this guy, right? This guy is just as valid trying to get up here. It's just the count isn't as friendly to that, right? Now I'm a long-term bull, right? I'm dying to see that, but I'm not ready to bet on that yet. And by that I mean take a long position because I think the probability is higher that we're coming down here. So knowing that, then I'd have both counts up, but I sure would want to be paying attention to that. Look at that. Look where that median line lines up. All right, so can we do this by the 19th? Well, you kind of look there and you go, we're kind of right on the edge here. So now essentially we'd have to do that. So we got about 3 weeks to make that. Get a little off here, get that tightened up here. So you always want to get those super tight. So here, this corner pocket very much in play, right? So you looked at that, right? So we've got our clean 5 here. We need to get into the Weiss wave, but so here that looks very reasonable. And keep in mind that could easily be our 2. Could be the B as well, right? So all setting up for what could be the C wave of the larger correction that we went through the other day here. So so you've got 2 things to consider. Because of that technical confluence, if we were to get down here and we could finish this in a clean 5, well, the ABC idea would certainly be something to consider. So whether or not this is a 2 or a B, there's certainly going to be an opportunity to take a trade here. Now, keep in mind, because we will have broken the 65, there'll be algos galore on the way back that we'll have to work through. So just to, let's see. For the sake of showing you this, if this breaks and we're going down here, right, we have no buy side algo working with us until we get a move like this. Then we get a buy side, right? Then you get that, right? So it would look, so if you get that pivot, then you get that set up. So this algo will be there looking for that. But of course, right, algos both sides, there'll be this guy here looking for that. Right, so it's just the same conundrum. It's not unique to Bitcoin. It's anything, right? Every market, every asset, name it, FX, equities, futures. It doesn't. 1 minute in the S&P, always this algo is there, always. Doesn't matter. 1 month, 1 minute, it's always there, right? So to not know about it, I don't know how anybody makes money. I mean, you got to know they're there, guys. You got to know they're there. So otherwise, look what you say. You're thinking, oh shit, okay, 2 here we go. Good. Oh, we're going. There's the big 3. Now, could it do that? Yeah, but I sure want to know about that 65 right there. I sure want to know so that if I start to turn over there, if it starts to soften there, I know why. I'm not going, oh shit, man, why'd we stop there? Well, is it point of control? Maybe that's it. Right? Market sure likes that price. Maybe we can get through the 65 just enough to get the algo target. And then it rolls over. But still, what I don't like is when I don't know why it stops somewhere. Why? That's always the question. Why do we stop here? Why do we stop here? Why do we stop here? Right? There's always a reason. Right? There is no random pivot. Well, rarely is there a random pivot. Sooner or later, if you dig hard enough, you'll find it related to some other swing. It may take you 6 hours to find it, but you'll find it. If it's a meaningful pivot, almost always technical. Somewhere, it may take you a while to find it, but you're going to find it. So here we go. So if we're going down here, we've got all of the ingredients here knowing, so the potential is, so let's take the 2 out. Staying with the idea that all of that is not in play just yet, and we're going to go A, B. Well, you're going to have a 5-wave C. Right, if this is the B, so there's a trade potentially setting up here. Now, if you want to be on the buy side, there's your hot spot right here. Here's your, right, well, it doesn't matter if we're going into a C wave or a 3 wave. Doesn't matter, same relationship. Right, here's the algo buy. There you go. Now, if you get a true 3rd wave, well, here we know this. We know, been over that enough times. We know that's our shorthand for a 1618. That's the high probability zone. Well, then what you say? Oh, well, if I get a 4 and then I get a 5, well, then I know where I am, right? Then I know I've got an impulse, right? Well, what if this is A, B, C? Right? You're expecting the 5 and the C. So you still on the larger count, you don't know where you are yet, right? Still. So how would you know? Well, you're not going to be definitive about this until let me get all of this off of here. Until you get this price action followed by this price action followed by that. Then you know that you have the potential is in for the 1-2 of a larger degree. Right? On the assumption that we go A, B, C. Now this is assuming. Well, that's interesting. Let's measure that. This is assuming that you double top here. So if we went the length of the A, and I'm gonna use my target down here. Well, here's 100%. Remember 100, 1272. Those are common targets for the C wave relative to the length of the A projected from the B. Now again, we don't have the B, so this is all just hypothetical, just trying to construct a roadmap. Saying when do we know? When do we know that we have a trend change? Well, look where I am up here. That's still just 5,000. That's that could easily just be setting up for the big move down or a big move down. Just right. So what can you do here when you've gone this far here and we're trying to identify, do we have a trend change? Well, you can certainly play these swings. But to just buy something and throw it in your suitcase and say, well, I'm a hodler, right? That's my luggage. I'm gonna hold my Bitcoin. There's a place for that. But if you're trying to trade this, I would not be taking that approach because there's just too much uncertainty here. So any trade that you're in, I want to strongly encourage you to have a stop on it. Because at no point we don't know, that could happen at any point. So what? Why are you gonna why let it get away from you? Why take all that drawdown? Yeah, sure. That you could be going, oh man, that was painful. That could get you well. But then now you're That's building really poor habits, right? You don't want to do that, right? So you want to do the analysis, take the trade, determine that moment, that level where your analysis is proven wrong. It doesn't have to be an Elliott analysis. Whatever you used, there's got to be a place where you say, at this point, I am wrong, right? So now I want to be out of the market because I don't know how far that's going. Or if I'm a buyer, right, I want to be conscious of the fact that if I'm running into the 100% up here, or if I'm running into that, I want to know about that, right? Do I want to tighten up a stop there, right? If this is going to go A, B, C, and we're going to start to come down, do I want to give back 50% just because I want to be a hodler? All right, you know, that's the individual choice you have to make. So lots of trading opportunities in here. They're going to be there, but right, expect to be wrong often. Right, and take the stop. Right, the stop. You take a stop. You go, oh, yeah. Nobody likes to take the stop, but at some point you got to go. Oh man, thank you. That stop's doing its job, keeping me out of trouble, making sure I live to trade another day. Right, don't let these things get away from you. That's the biggest mistake. People. I have new members come in all the time, and it starts with a long letter of here's what happened to me, and here's why I'm looking for help, and here's. Right, it's common experience. So, but almost always, it's because they'd let that happen. Almost always. Rarely is it something other than, I was very excited about it. I loved the project. It seemed like everything was going great here, so I just bought it. Oh, great. Did you put a stop on it? No, I wasn't sure. I didn't want to get stopped out. I just thought, it's going to keep going. Right? It's sooner or later, it couldn't possibly go to 2,400. It couldn't possibly go to 2,200. Right? Maybe we hit the median line down here, 1,600. It's certainly possible. Right? That's just the second you enter the market. There has to be a spot where you say, okay, at this moment, at this level, I know I'm wrong. I want to be out. Stop's going to take me out. Thank you very much. I live to trade another day. That's trading, guys. That's the reality of it. You will be wrong more than you're right. I don't care who you are. Right, so how do you make money being wrong more than you're right? Well, right, we know the answer to that. It's money management. Right? As long as you're making more when you're right than you're losing when you're wrong, over time, that's going to work for you. Now, right, it's not quite that simple. We want to get it could be that simple if you had a 3-to-1. Every trade, you got 3-to-1. What if you got 6-to-1, 7-to-1? Right? Those are the difference makers. That's what makes a year, the one that runs. Right? That's not, hey, I'm hitting a single. It's when you get one that goes. That's what the whole idea is. Right? Not to catch this little thing. Right? It's to catch the big swing. Right? Those are the ones that make your year. As I've said this many times, right? I've traded with, worked with, been taught by some of the best traders anywhere. Right? Just good fortune, right place, right time. And they all will tell you the exact same thing. The bulk of their money, 80% of their revenue comes from 20% of their trades, right? The rest of the time, you're just trying to get positioned and not get hurt when you're wrong, because you're going to be wrong. All right, yeah, I went a little bit longer than I thought I would here. So that said, right? So if you're not in, right? Just to conclude here, if you're not in, no reason to be in, right? As I'll tell you, you got better odds in Vegas, and the drinks are free. Why? You're just rolling dice there. Rolling dice. Okay, guys. I'll wrap it there here. Just if you're interested in that New Year's special here, links will be underneath the video. All right. I'll be back. We're going to look at Ethereum as well. Okay, guys. Back to you later.